In October 2021, we discussed the rising commodity prices and analyzed its impact on China's consumer sector. Now, while result seasons has passed and companies in the sector have adjusted their operations, how is the current industry landscape? Ethan, can you give us a review on the consumer sectors in China?
China's consumer industry is still under pressure, impacted by two major reasons. Internationally, the ongoing Russia-Ukraine crisis has been seriously hitting the global oil and commodity markets. Domestically, the flare-up of the Omicron situation across China has also disrupted the supply chain and impacted consumer demand. Since our last discussion, many consumer companies announced price increases on their products to pass on the rising raw material costs, ranging from commodities, packaging materials, energy costs, etc. While most of the industry-wide price hikes has been successfully implemented, the cost inflation situation is largely unchanged. In March, China's PPI rose by 8.3% from a year earlier, coming in above expectations. Though the year-on-year rise was the slowest since April last year, the monthly increase of 1.1% was the fastest pace in 5 months, up from 0.5% in February. Meanwhile, the local consumer demand remained weak as COVID-19 lockdowns and transportation restrictions disrupted travel plans and holiday spending. During the past 5-day Labor Day public holiday, the number of trips taken domestically fell by 1/3 to 160 million. Tourism revenue over the festival tumbled by 31% compared to last year, totaling 18.8 billion yuan, less than 40% of the value in 2019. In addition, the wide range of lockdowns also impacted offline consumer services businesses like restaurants, supermarkets, and cinemas.
Given the large operating pressures that the industry is facing, what is our take on the outlook of the industry? How is our portfolio positioned differently?
While consumer companies are facing large operating pressures, we remain positive about the consumer sector once the pandemic has been tackled. In April, the high-level Politburo policy meeting also reinstated the importance of consumption in the local economy. Several cities, including Shenzhen and Beijing, have announced their consumption voucher scheme to boost local consumption. The HSE China Fund's ambition is to hold the best 25 Chinese companies based on their inner strength, valuation, and relative attractiveness. With regard to the consumer companies in our portfolio, we aim to hold companies with strong brand name. These are the key factors determining whether the company can pass on the high input cost to consumer or not. In our portfolio, the consumer holdings like Haitian and Proya all have strong brand names. Once the pandemic eases, these should be able to benefit from the recovery. In the future, we will continue to explore companies that may benefit from the long-term development of the Chinese economy and include them in our portfolio.
That's it for today. Thank you for watching and hope to see you again in the next episode.